with good vibe. And right now, man, like I say, I got my man Rich Dennis from RichLife Investments in the building with me. We're gonna go over some things that can get us into a better financial position going forward in the future, because that's what it's really all about. Once again, money is not everything, but I can tell you, having money does make a lot of things a lot easier. You're able to take on your problems a little bit easier, because 99.9% of most people's problems, somewhere in that area, is going to be money. Whether you don't have enough, whether somebody wants more than what you got, whether you can kind of see your future and it's not looking bright, or you want to make some changes. It's probably going to involve some money. So right now, like I said, man, I got Mr. Rich Dennis in the building. What's going on, sir?
Hey, what's going on, DRoe? It's a blessing. Thank you for having me in again.
All right. So like I say, man, we trying to figure this money thing out. Everything's I've been getting back, to a financial a good point financially. But like we discussed earlier when you were here last month, the money point and keeping it going. What we got? Like you say, you always bring in something to me and put on my mind. I know a few my other listeners' minds. What you bring in today?
Today we want to talk about the Smart UL, Universal Life,
Okay.
and the benefits of getting a Universal Life. Basically, an insurance plan that will carry you out to your 121.
Okay.
This will be the last insurance policy that you will ever have to get.
Yeah.
The benefits of that, if you get it young, while you're healthy,
Yeah.
so, if something happens to you down the line, you don't have to worry about getting qualified, or getting denied for insurance or coverage, because you're already locked in. That rate is taken care of, and you get the increasing volume on that. So you get a cash value on that account. Right now the interest rate is 5.3.
Okay.
So every time you make your monthly premiums, you're earning money basically for paying your insurance premium.
Yeah.
So you're talking about an opportunity to not only create a cash account that later on down the line, if you want to take out for a home loan or your kids' college fund, whatever the case may be, something that you can actually take out, have a vacation, and when you take that money out, you're actually borrowing that money from yourself. You're going to pay it back at a 3.3% interest rate.
Yeah.
So it's similar to a 401k.
Yeah.
However, you don't have to deal with the ups and downs of the market.
Yeah.
So that gives you that peace of mind, knowing that not only am I accumulating money, but I also have the coverage that I need if something were to happen to me, that my family will be taken care of, my kids and my generations will be taken care of. And then down the line again, that cash value that's in that account, you're looking at maybe, I don't want to just throw random numbers out, but for everyone it's different. But your plan premium, if you're doing this and sticking to the plan on the initial plan premium, if you're doing like 140, 150 bucks a month at 5.3, thinking maybe $10,000-$15,000 in about 10-15 years.
Yeah.
And then, like I said, you can always draw on that for whatever you may need.
Yeah. I mean, just listening to you when you said that, I know a lot of my friends are, entrepreneurs, and they do things on the side. And yes, they do have regular jobs also.
Right.
So they have a company 401k. But this is something that you can do on top of that also, and
Yes.
see a nice dividend. Because like what you're saying, it pays out at 5%, you pay back at 3%. I mean, that should kind of tell you that you're basically just used their money.
Right, and then not only that, but again, it's going to be your money that you're using, because you're paying into the premium. So the difference in between the 401k or a company 401k is that there's no premium match. The company is not going to match you, so the insurance company is not going to match you for paying your premium. However, they are going to cover you if anything were to happen to you, death, critical illness, chronic illness, whatever the case may be. You do get that opportunity to create that account and then get that cash value in it, to whereas you can draw on it, and then you will have that for emergency times. So think about it. When you need of financial assistance, rather than having to go to a payday loan or going out and running your credit and trying to get money from whoever or call whomever because you're in a bind, you've already planned and prepared yourself for down the line to be able to say, okay, you know what? There's a life crisis. I need 10 grand. I have 10 grand because I invested wisely, and I took wise counsel and made the proper preparations to put myself in a position to not only take care of myself but of my family as well.
Yeah, I mean that's gonna be key, especially like I said in this up and down economy that we do have. You never know when you're gonna lose a job.
Right.
You never know like I tell a lot of people, never know when you're gonna end up sick and you're not able to go to work, or your kids are sick. You know, the house note still needs to be paid, car note needs to be paid. You know, everything else needs to be paid. You're gonna have to have some money.
You're absolutely going to have some funds, and that's, like I say, I keep going back to the benefits of it, because the programs are so amazing, and the fact that people don't know about them or are unwilling to learn about them. You know, a lot of times, you try to talk to people about investing money, and it's, oh, well, I put mine under the mattress. Don't put it under the mattress.
Yeah.
Put it somewhere where it's going to gain you some interest, so that your money is making you money.
Yeah.
You'd be amazed at how many people I come across that don't have bank accounts, or running the green dots and the
Rush cards.
Yeah. And like no, go get your bank account.
Yeah.
You know, like get legit 100% and really take control of your finances. You know, a lot of just regular banks now have the software in there where you can track your spending. Like, get involved with that stuff. Use the software and use the tools, so that way not only can you see where your money is going, but once you see it, it'll wake you up. Hey, I'm wasting money over here and over there. If I was to stop spending here, I'd have an extra $2,000 a year that I could invest in whatever it was. You can reach your financial goals as well as your personal goals, whether that's opening a business or just redecorating your home. You know, without having to, go take out loans and going in debt. Stay away from credit cards. Yes, stay away from credit cards. Not saying not to have them at all, but if you can't use them responsibly, stay away from them. Yeah, definitely stay away from those, because the interest rates on those, you're looking at 20-something%. When if you just save your money up, if that item costs $400 or $500, save some money up over a course of time and go out and buy that cash outright, rather than having to pay an extra $200-300 on that $400 that you took out because of the interest rates on that.
Yeah.
So you definitely have to pay attention to those things and where that money is going, or else you'll be chasing the wind.
Yeah, and I mean that's definitely big amongst our community.
Right about that.
Making sure that we make smarter decisions with our money. I mean, they say that we do have the #1 buying power. We do spend the most, so we have to make sure that we're spending our money on things that are tangible, not things that are pretty much so. I don't want to say cheaply made, cheaply bought, but things that don't really gain any value
at all.
You know, time you walk away with this item, it has already lost 20-30% of its value.
Yep.
And that's something that we have to definitely do better at and get better at. And it's like you say, it starts out with the knowledge and gaining the will to want to do it, using the technology that the banks have. They'll let you know. I mean, when you go to the bank and you try to make some kind of large purchase, they'll tell you, hey, what you've been doing with your money.
Right about that.
You know, or they're going to ask you, and you're going to have to tell them, and there's going to be gaps, in your spending, and it's still going to look bad.
Yeah.
When you don't have certain checks and certain boxes on credit applications or mortgage. That's just evident.
Not only that, but jobs look at that kind of stuff. Jobs look at your credit.
Yeah.
So when you go out and you're trying to apply, that's the difference. You want to make $50,000-$70,000 a year, or you want to make $15,000 to $30,000 a year. Like, jobs are able to go out there and look. They're not supposed to be be biased about that. But I mean, if you have candidate A on the left that is, has a degree, has financial documentation and records, and has good credit, you can see their payment history. Then you have candidate B on the right, has a college degree, yet is in debt, $20,000-$30,000 something. Like, who you gonna go with?
Yeah.
Who you gonna go with? It shows you who can manage their money, because if you can't manage your life, then you can't manage their business.
Yeah.
That's kind of how they look at things. And if you really want to set yourself up for success in life, you have to learn about financials. Yeah. You have to. That's really what it's all about. Everybody says money makes the world go round. Well, if you don't understand it, then can you understand how it's moving?
Yeah.
Other than in your pocket and then out your pocket.
And out your pocket.
That's it.
And I mean, it's just like when you just said that. I mean, yes, jobs look at your credit. They say, hey, if you've got a bunch of bills that aren't paid, late payments, I mean, 9 times out of 10, you're probably going to be late for work.
Mm-hmm.
I mean, they work hand in hand. Once again, they're not supposed to be biased, but, behind the scenes, they'll consider that.
That's right.
It's not going to be on the job application. It's probably not going to be one of your interview questions. Nope. They've already kind of made this up in their mind, and from there, you have to sell them totally different once you get in there into the interview. And that's like I tell people all the time, you have to really look at, the life that you're really trying to live and develop. Because once again, you're entitled to doing exactly what you want to do.
Right.
But some people might look at it and say, hey, that's not what you should have been doing.
Well, it's just like, you know, you have your criminal records, you have your financial records.
Yes.
So, I mean, they're looking at everything, and we should look at it as well.
Yeah.
Just like you want to have a clean record over here, you should want to have a clean financial record. So everything is where it's supposed to be. And when people see that, okay, that's somebody who's responsible.
Yeah.
That's somebody who's going to take care of business. We can afford to put them in a situation to be over such and such and try to grow and expand our business.
Okay. I mean, yeah, and that's definitely key, man. But we're going to get back to it in just a moment, man. We're going to another real quick break. I've got Lauryn Hill along with D'Angelo when Nothing Even Matters. Once again, man, we got to get these finances right. Main thing is just gaining the knowledge on it.
Right.
The knowledge is out there. You got to want it. Got to take it serious. That's just the best and the easiest way that I can explain it. But right now, you got the Show, 890 AM, FM 103.7, streaming live, KTLR.com.